Wall Street's stance on Palantir Technologies has swung decisively toward optimism, reaching one of the most constructive outlooks the company has seen in years. After enduring a prolonged 4-month downturn that weighed heavily on investor confidence, the narrative has shifted back toward growth, particularly in light of rising geopolitical tensions. At the heart of this renewed enthusiasm is the company's deep involvement with defense and intelligence operations, an area that represents roughly half of its total revenue through contracts with agencies of the United States government and military institutions. As geopolitical risks intensified, investors quickly recalibrated their expectations. On Monday, shares of Palantir Technologies advanced 5.8%, extending a 4-session rally that totaled 13%. The upward movement began the previous week when President Donald Trump escalated warnings directed at Iran. That momentum carried forward as military strikes conducted by the United States and Israel unfolded. Officials within the Trump administration signaled that hostilities could extend for several weeks, while Iranian representatives suggested the conflict may persist even longer. Markets, which often react swiftly to uncertainty, began to factor in the possibility that prolonged instability could translate into increased demand for advanced defense technologies and data intelligence systems. However, not every voice attributes the rally solely to structural improvement. Tim Pagliara, Chief Investment Officer at CapWealth Advisors, a firm that owns shares of Palantir Technologies, characterized the surge as largely emotional. In his assessment, the conflict does not fundamentally alter the company's long-term financial framework. Rather, it reinforces the firm's entrenched position within government agencies and highlights the competitive barrier that shields it from many rivals. He emphasized that Palantir Technologies is already deeply embedded in government workflows, and moments of global tension simply underscore the strategic value of its platforms. In other words, the war does not rewrite the company's trajectory, but it shines a spotlight on how integral its systems have become to national defense infrastructure. Even amid the rally, volatility remained present. On Tuesday, shares slipped 1.6% as broader equity markets faced widespread selling pressure. That modest decline serves as a reminder that short-term price swings often reflect broader macroeconomic forces rather than company-specific developments alone. To understand the magnitude of this rebound, it is important to revisit the recent downturn. The stock had previously fallen 38% from its record high on November 3rd to a low reached on February 24th. That sharp drop followed intense scrutiny from investor Michael Burry, known for his association with The Big Short film, who questioned whether the company's valuation had become detached from realistic growth expectations. His critique centered on concerns that the market had priced in overly ambitious assumptions about expansion. Additional controversy surrounded Palantir Technologies' contractual relationships with United States Immigration and Customs Enforcement and the Department of Homeland Security, relationships that drew political and public attention. Despite these debates, Palantir Technologies has maintained a long-standing role as a key contractor for the United States government. Its work spans military analytics, intelligence integration, and immigration enforcement systems. In 2024, the company secured a $100 million agreement for its Maven Smart System, an artificial intelligence-powered battle management platform designed to unify and interpret military data streams in real time. Later that same year, during the summer months, the firm was awarded a $10 billion contract from the United States Army. Government officials indicated that the arrangement would accelerate procurement timelines and ensure soldiers gain rapid access to advanced data integration, analytics, and artificial intelligence capabilities. These agreements underscore the scale and significance of Palantir Technologies' footprint within defense operations. Interestingly, optimism among analysts had already begun resurfacing before airstrikes on Iran commenced. While part of the earlier share price decline stemmed from fears that artificial intelligence might disrupt traditional software providers, Palantir Technologies is widely regarded as a direct beneficiary of artificial intelligence adoption. Its platforms are specifically designed to harness and operationalize vast datasets, making them central to the artificial intelligence revolution rather than vulnerable to it. That thesis gained credibility following the company's most recent earnings announcement, which exceeded Wall Street expectations and presented a revenue outlook that surpassed forecasts. Dave Mazza, Chief Executive Officer at Roundhill Investments, whose Roundhill Generative Artificial Intelligence and Technology Exchange Traded Fund includes shares of Palantir Technologies, described the company as having demonstrated a durable growth pathway even amid a challenging macroeconomic climate. In his view, the wave of analyst upgrades reflects growing confidence that the firm's fundamentals remain robust. Nevertheless, valuation continues to dominate the risk discussion. Palantir Technologies ranks among the 5 most expensive stocks within the Standard & Poor's 500 index based on forward earnings multiples. The shares trade at approximately 104 times anticipated earnings over the coming 12 months. When evaluated against projected revenue, the stock trades at 45 times estimated sales for the same period, making it the most expensive company in the benchmark by that measure. Although these figures remain elevated by historical standards, they represent a significant moderation from prior extremes. On October 30th, the price-to-earnings ratio had climbed to 247 times. On August 8th, the price-to-sales ratio reached 89. Relative to those peak valuations, the current pricing environment appears less stretched. Mazza observed that if analysts were comfortable endorsing the company's fundamentals when the stock traded at $200, it stands to reason that they would find greater appeal when shares are closer to $140. Indeed, the sentiment shift has been dramatic. A new buy rating from Rosenblatt Securities, combined with multiple analyst upgrades, has transformed the tone of coverage. Out of 31 analysts following Palantir Technologies, 20 now recommend buying the shares, 9 advise holding, and only 2 maintain a sell rating. At the start of the year, just 9 analysts rated the stock as a buy. The consensus price target sits near $192, implying potential appreciation of roughly 32% from Monday's closing price. That shift illustrates how quickly Wall Street opinion can evolve when narrative, valuation, and macroeconomic forces converge. Several prominent firms elevated their outlooks in the past month, including UBS, Mizuho Securities, HSBC, Freedom Capital, Daiwa, Northland, Baird, and William Blair. Carl Kierstead of UBS captured the renewed confidence in a February 26th note to clients, describing Palantir Technologies as the premier growth narrative within the software industry. He highlighted its position at the intersection of 2 dominant spending trends: artificial intelligence and large-scale data analytics. He further suggested that the valuation multiple has retreated to levels that allow investors to construct a more compelling case for ownership. The company's latest earnings report reinforced that narrative. Revenue surpassed expectations, and forward guidance indicated stronger expansion than analysts had anticipated. Palantir Technologies forecasts revenue growth of 73% over the next 12 months, ranking 5th among companies in the Standard & Poor's 500 index, according to data compiled by Bloomberg. Such a growth rate places the firm in rarefied territory, especially within a mature benchmark index. All of these dynamics position Palantir Technologies with significant momentum entering a period defined by geopolitical uncertainty. Investors across global markets are grappling with questions about how long tensions involving Iran may endure and what cascading effects they could produce across supply chains, energy markets, and economic stability. In that environment, most companies face heightened risk. Palantir Technologies, by contrast, operates in a domain where disruption can translate into heightened demand. Beyond direct defense applications, the company's software has gained traction in commercial contexts, particularly in evaluating supply chain vulnerabilities. Mandeep Singh, senior technology analyst at Bloomberg Intelligence, noted that escalating conflict could assist the firm in securing new clients, especially businesses exposed to Middle Eastern operations. One of the prominent commercial uses of Palantir software involves assessing supply chain risk, a function that becomes critical when geopolitical tensions threaten logistics networks. Companies with exposure to the region may increasingly turn to advanced analytics tools to anticipate and mitigate disruptions. Although geopolitical friction existed prior to the current war, the present circumstances introduce a new level of urgency that could accelerate adoption. Taken together, the convergence of defense spending trends, artificial intelligence expansion, analyst upgrades, and moderating valuation levels has reshaped the investment narrative. While risks tied to valuation remain substantial, the company's entrenched government relationships and technological positioning provide a framework for continued growth. In periods when uncertainty dominates headlines, businesses capable of transforming chaos into actionable intelligence often find themselves in greater demand. Palantir Technologies appears to occupy precisely that space. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.